Hello and welcome. It is the 28th day of May 2019. Let's do a very quick Fibonacci update for Bitcoin, as well as just some levels. I just played around yesterday or the day before. I think it was yesterday, where I just played around over the next little while. What could the market look like if Bitcoin just runs a fantastic move from here? This has been magnificent from its lows. Now, amongst such, the price action from this high, when we look at this from the lows, not back in 2012, but back in these lows in here, from these highs, well, what we have seen is that it came back down from the highs, right pretty much on that level, pierced below, piercing above here, multiple numerous hits in here, and then on the fall down from there, a large move, and it came close, albeit I wish it was a little bit closer, but it is what it was. But it kind of is a Fibonacci hit. Pierce above for what the normality is, it's a miss because usually it pierces extra, but sometimes if you don't want to be too perfect, you can say that's close enough, that's correct. Obviously, if you thought, say, 4,600 was down so much, well, that's what you thought. And now we don't find resistance here back on the way up. That's a shame for the bears, but I don't really care for them. And bullishly, we find support in here, lifting off higher. This is all looking good. So what kind of Fibonacci lines would be in between here? Well, using those same numbers, this is a 23.6% down move, and the one before that, which is like a 14.5, 14.6%, well, that comes in around 96, 9700, which coincides within the daily term. Well, within the Fibonacci from here to here, rather, which I have on Coinbase, which I'll show on the daily term, of the 9814. Okay. So this little range in here, probably, I see it taking it out given how it supports this, is lifting off higher from that point there. And I've been adamant for quite some time on the break. Well, first when it gets there, it's a now what question mark situation. And I got to look at the next many hours after that to see what's going to be the case. And resistance was so much not being shown. So it just only took me a couple of days or whatnot, roughly, definitely around the 7,000 mark to start to be confident. Yeah, it looks like we're going to 10. And as I've been saying for this channel, yeah, I think there's a better chance we pierce above 9,800 low change than we do piercing below 6341.9. And we'll see how long, see if that works out. But so far, so good, and how it looks. Let's take a look at just for fun. What I did was just put numbers together. This is just how it would look. Does it make sense? And again, just for something to do, entertainment purposes is all I could say. And again, everything you do is your own risk, own reward if you think what I say is going to be completely right or completely wrong. And I drew this up really fast in less than an hour. And what I'd have is the current prices right now, where we stand at about 9,000, a move up piercing above 10, and then a comeback, pull back down to the 6,000s area. I mean, it's going to have to stop going up at some point. And I do think, I mean, whatever. I think I would quote unquote bet on it if I had to, that 10,000 is going to be significant resistance of sort, and definitely not what it's been like the last few times, but of course it'll do what it does. But then there after that, I think we're going to come back, have a little bit of area within this, get above it, and then make it up to this previous 20,000 level where we'll find some resistance, have an okay pullback, and then work its way back there a lot slower than it did originally. And then a little bit of a pullback again, and then just go for a phenomenal move. And these are the amount of days it would take. So this would be spanning a little over 220 days, maybe 8 months, taking us into the late winter of 2020. And then from this big move up here, break established resistance of the 20. Now this is like, oh my goodness, this is big. A little bit of a pullback and grinding its way. Then a large move up here to 68 or 62 rather. And how I was planning on doing this from here on in was for price action to have a lower high move up to about 48 to 52, and then come back down to about 20, 16,000. And then its next run from that point on will work its way to about 240. And hopefully by then the 240 would hit by around day 675 to day 107.75. But that's what my plan in the head was to do. But then I got bored. I'm like, yeah, screw it. I just don't feel like doing it anymore. So I'm done doing this entertainment piece. And I'll finish this off by stating how I calculate Fibonacci because most people do it wrong. At least I'm adamant That when they do, oh, let's do high minus low, multiply Fibonacci percentage plus the low. Really? Okay. Okay. Well, okay, your decision. But I do high divided by low to the exponent of the Fibonacci percentage multiply the low. That works more accurate, I think. And that's how these ones are calculated. And that's what's big about my channel. I think I go majorly against the grain. I don't use a black background. I use a white or a gray one. I don't put like 20, 40 different indicators on, 3 different indicators. I pretty much stick with horizontal rays and my 18 average. And I use the 18 average. I mean, who else does that? The fact that I created it should be a good reason why others wouldn't. But even log scale. I see a few people use it, and when you're talking about high volatility, you're like, oh, log scale. Yeah, this is what the log scale looks like, and let's even go monthly chart. This is what it looks like on log, and this is what it looks like on not. So that tells you, oh, not much happened in here. Yeah, a lot happened back there. Well, a little bit happened, but a lot more showing here than back there. On the daily chart, if we take the log off, it looks a little different, but practically the same. So the shorter term you go, and then if we put this on, say, a 15-minute time frame, log off on. You can't even notice the difference because the differential in volatility is like 3%, 4%. For it doesn't matter when it's that. So if you do Fibonacci the wrong way here, the linear way, and the logarithmic way, say from this high to this low, you're going to get around the same numbers because there's not much volatility. But when it gets big, you're going to get much, much different results. Thank you for tuning in, and have yourself a great day. Bye-bye.